G'day there. Welcome to the closing bell on the 19th of January. And after the Santa rally we had, people starting to get a bit bulled up, but we've had a bit of a pullback, haven't we, going into the new year? I always find that going into that Santa rally, I reckon there's sometimes a bit of window dressing. The fund managers out there getting a big bonus when they spike markets into the close in December. And sometimes the heat comes out of the market early in the new year. So it's a pretty touch and go time right now. And the way I sort of see things is, this is a really tricky time to be sticking your neck out and saying market's going to blast off or, have a correction from here. So I don't think today I want to be doing anything more than showing you sort of the trends as they are and what we need to look out for going forward. So I'm going to start with the S&P just to give you a sense of how tricky it is when a market is retesting a major high and what can happen from there. So looking right now where we are, we're with that S&P 500 after a year correction, it's rallied and is now retesting that all-time high. And, classical sort of technical analysis would be saying, oh, get ready for the breakout. Is it going to break out? Looking for an extension to the upside, which could absolutely happen. This S&P, after following it for many years, you can think it's overdone and rallied too far, and the thing just keeps going. And we're on the edge of rates falling. And also this AI revolution really is something that is piquing my interest from the point of view of companies adopting AI and really being able to shed employees and increase efficiencies and increase margins. So perhaps this AI revolution really is going to feed through to the bottom line in companies, many companies. So, perhaps that's going to be enough to really cause a serious breakout. And as things stand, looking at the trends as they are, it has flipped into long-term uptrend in that S&P 500. And last month, you'll remember, I basically switched off any bearishness that I had once the market created that buy pivot last month, 2 months ago. And then we had the December rally, which took prices through to that all-time high. So right now, the way it's standing is you've got to allow that long-term trend to play out because they can go on for a very long time. 04 to 08 before the long-term trend turned down. Then in 2010, pretty much all the way through to 2022. There was one small period in 2016 where it flipped into downtrend, but then flipped straight back up. So that trend that I use, a 10-month exponential versus a 20-month simple, it is something to be respected once it's getting going. So the way I see it is I've got to allow this trend to play out and go with it. But I am very aware of how a market often tops out, I guess, that you often have what is a double top, I guess would be one way of expressing it, is when a market sort of attempts to take out an old all-time high and then fails to carry on. And that can actually be the beginning of a major sell-off. So that's why, looking back at that period, 2000 to 2008, you can see prices rallying there, nice long-term uptrend, going to retest that high, get people all bullish, and then all of a sudden it turns down. So the false break of a major high and then long-term downtrend, and that was the crash into 08. So it is one of those times when you do have to be just aware of what can happen technically on a retest of a high, that if it doesn't carry on and the selling returns, you just have to understand that can be a major high when that happens. But we just have to, you have to see the selling pressure before you can change tack, I guess would be the point. Um, for example, back in 2018, you do have these retests, and if the selling comes in, well, you've got to react and be prepared for more downside, because it really can, the music can stop quite rapidly when the market doesn't carry on. You can see here, broke out, and then that's the 2020 crash. Quite a weird set of circumstances. But right now, I think it's just foolish to be getting too cocky and saying it's going to do one thing or the other. I think the best you can do is say, look, it is trending up. It's looking strong. If it can really break out, then, who knows? It really can carry on with it. And that you do need to see the selling pressure. So we need to see, let's say, a monthly sell pivot before you can even begin to change tack. And really, it's once the long-term trend turns down that you then are allowed to say, right, really watch out. So for the moment, we've got no choice but to give this market the benefit of the doubt for the moment. Go with it if it can keep rallying. But just be aware that we're retesting a high, and these things can peter out and turn down. So that really is the best I can do. Looking at this market in the way that it is, it's a very tricky time when you retest a high. I don't like buying breakouts, um, for the very reason that false breaks happen so often. So I guess that's one thing. But as this rally develops, then we're going to get more information, and we will be able to become a bit more comfortable in sort of being confident of what's going on. But right now, that is just the situation. We've got to deal with it. And, I have been telling you about uranium months ago. That now really blasting off. I hope a bunch of you who maybe aren't members of my services did take action. That would be good. I know guys in my two services have reaped pretty big benefits, up 75 to 100%, the stocks above their entry price in just a matter of months in that uranium space. So that really is the most exciting area, and it's really blasting off. And that's been a great call, I think, over the last few months. But sometimes the market just isn't giving you much. It's very difficult. And also that future, facing metals, we're seeing a really serious correction in that space, and I just want to quickly show you that. So after all the hype that we've seen over the last few years in that future-facing metals, and I've certainly got caught up in it, and am sort of excited about the long-term prospects. But we are seeing a real clear out of that huge rally we saw over the last few years. But I'm interested in this because I really think it's going to ultimately be a huge opportunity that we need to watch this year. This could be the biggest opportunity of the year, looking for a bottom in this sort of lithium, rare earths, graphite sectors. And I will show you quickly why and what I'm looking for. So this being the rare earth strategic metals ETF, and you can see quite clearly from the period back in 2011, there was all these restrictions, and we saw a massive spike and then failure. So a huge sell-off there. And what I want you to notice is that sort of slow rounding bottom, which is what I like to see when a market is changing direction. And we do have, the first wave higher, which failed, and then another wave, and that's what I'm interested in, is when it breaks above a previous major wave high. That's sort of a hint that there possibly is a change of trend coming. But then I'm waiting often for a big retracement of that wave. So if we can see some sort of reversal out of these depths and get that long-term trend shift, I think that could potentially be just a huge opportunity if we really believe in that space down the track, that the growth in demand over the next decade in things like rare earths, graphite, lithium, etc. So it's a similar situation in lithium. We'll just have a quick look at that. So this is the lithium, global lithium battery tech ETF. And you can see, massive run. This is all the hype. All the retail traders ending up buying near the highs. They're all getting shaken out now. You'll see it's just sort of a similar situation to what happened from 2016 to 2017. Big rally, and then you get the clear out, down to that buy zone area that I keep talking about, the 75 to 87% retracement areas, what I really look for. And then the turnaround, the long-term trend shift, and then off to the races. And here we are, it's failed, long-term downtrend, tried to hold at that point of control for there for months and has broken through there. So now we're in that real capitulation phase. And so I'm just going to be watching and waiting and looking for signs of a reversal out of there and a trend shift. So we're still early days. We've got to see how this pans out. And of course, if the whole thing collapses, fine. But right now, you're starting to think, when is the low going to be? And getting excited about the opportunity long term. This is when you really do make the money, is buying the reversals out of these major lows. So, that is definitely something that I'll be thinking about this year, and you should be thinking about as well. I'm sure many of you are probably holding stocks that you're underwater on and possibly dumping. It is that sort of a market at the moment. It really is pretty tough out there, still very tough. And my view is that I think China is flooding the market in these battery metals just to bankrupt a lot of the Western competition that's trying to get off the ground. That really is my view. I think they do that on purpose. They've cornered the market pretty much. And in this phase, when all these new companies are trying to get set up to crash the market in those commodities, is obviously in their interest, because then you get rid of that competition and then they can tighten up their grip even more. So I think there is bigger things afoot. But if we're looking long term, I still think that space is going to be a huge opportunity. So, the way I look at things is that these waves with the big corrections, this is just how markets move, big corrections, and the next one, just imagine what it could be over the next few years as demand starts to really pick up in that sort of EV space. So that's probably my biggest idea for the year. Look, going forward is thinking about that and waiting for this bottoming process to play out over the next 6 months. So yes, that's what I'm seeing out there at the moment. But very tough market environment, no doubt about that. Not a time to be sticking your neck out too far for it to get chopped off. All right, well, I will come back with more in a couple of weeks. I think away for next week's one. All right, cheers. I'll talk to you soon.